Coverage of NCBA's CattleCon 2024 is brought to you by Alltech. Working together for a planet of plenty. Find out more by going to alltech.com. And welcome back to Real Ag Radio here on Rural Radio 147 at Sirius XM. We're at the NCBA CattleCon convention here in Orlando, Florida. I ran into this is kind of an annual thing. I do this once a year. I get to run into Don Close. He is with Terrain. Don, great to see you again.
Good to see you as well, Shaun.
Okay, lots happening in the cattle markets. Yeah. Globally, it's kind of a really, really disruptive time. Do you have your finger on how we're going to look back on 24?
I don't know that anybody has their finger on how 24 is going to be with so many potential landmines out there. So I think the safe way to answer that question is we will continue to see a tremendous amount of volatility, specifically on the export markets.
That's concerning to me, though. Because, a lot of times we focus on the domestic consumption. And right now we're putting a lot of pressure on the consumer to pay a lot for beef. Now, they've come through for the most part. There is obviously some warning signs out there, but we can't afford to have any sort of a slowdown in the export markets. Where do you see this volatility really, really taking hold?
Two things I would say on that one. The first off, we did in fact see a very measurable slowdown in U.S. beef exports in 2023. So we've got the brunt of that pill behind us already. With that said, there's still some very bright spots out there. The total trade volume of protein we've got going with Mexico is nothing, pork specifically, but nothing short of amazing and continues. A real growth area for U.S. beef exports is Central and South America, and while those countries aren't the huge, the China, Southeast Asia, but collectively it makes for some real tonnage. So I think there's still some bright spots. As complicated as the China situation is, I think we jump to a conclusion that it's all going to end tomorrow or very soon, and that's simply not the case. And you still look at 1.3 billion people, and the percentage of that 1.3 billion that would categorized as high or very high net income people. I think there'll be business with China. It just probably won't be as robust. Now, we brought in the domestic side of it, and when we look at real per capita expenditures on beef, or on all species. So essentially we're taking the monthly volumes times the monthly retail price and deflating that to get a net dollar expenditure for beef. So instead of talking a nebulous index number, we're looking at total dollar numbers. Those numbers are nothing short of amazing. Demand for beef is still very, very good. Dave Weber has done with Terrain has done some work, and we're even taking those total beef expenditures monthly, breaking that down by quality grade, and looking at where beef is going by grade, and it's really exciting work. But what we're seeing with that is, again, whether we look at it by under a specific quality grade or if we look at beef in the aggregate, we're not seeing any damage to total beef demand. In fact, if you compare beef with the total expenditures to both pork and broilers, you can actually say beef is holding its strength at the expense of specifically chicken. So in spite of the uncertainty of the domestic economy, the recession or the inflationary impacts, the higher interest rates, what we've seen so far is it has not been the detriment to consumer spending that is feared.
Yeah, that's on a dollar basis, not on a tonnage basis.
No, that's on a dollar, a combination of tonnage times price, so a net dollar value.
What are some of the other things you're paying close attention to right now, Don?
We're like everybody else. We're holding, anxiously waiting the release of the cattle inventory numbers this afternoon. No doubt they're going to be smaller, but we'll continue to watch just what weather conditions are by region and what that will enable us to stabilize and even start to look at rebuilding some female numbers. We put a lot of emphasis on that heifers as a percent of the total on feed mix. That was a part of the January cattle on feed report, that heifers on feed is the fourth largest we've had under the current cattle on feed series. So I think that by itself tells a very compelling story that we're not retaining heifers as of yet because we couldn't have that many on feed.
Yeah. But we would retain more heifers, though. It's the grass situation. It's Mother Nature on the western side of the United States. It's the same story in Western Canada. Until we get a sustained change in the weather pattern that ranchers can rely on and say, okay, the signal's there, like the market signal's there, but Mother Nature's not giving a signal.
No, they're absolutely correct. I mean, just with the storms of the last 2 weeks, certainly you've seen a lot of moisture across parts of Nebraska. You've seen really good rains just the last 2 weeks, basically along the entire coast of California. So seeing some improvement there. As I talk with producers in the southern plains of Texas and Oklahoma, they tell me, we've had some moisture of small rains, a quarter-inch rains that's been very supportive to winter wheat pasture, but they've yet to have the deep soaking rains required to recharge that grass. The one other point that I would bring up in just the recent round of weather, we had massive rainfall in the 5 to 7 inch category, Louisiana and across that southeast complex. That was really the hub of cow liquidation during the second half of 2023. So with that area getting the rain that it's had, I think once it dries out enough to start doing anything about it, we'll see some improvement there.
Yeah, and all of this, we're hoping that it leads to better margins for not only the rancher but the stocker and of course the finishing yards.
The real challenge for all margin operators in this market environment, short supplies, the cost of feeder cattle or all classes of cattle are going to stay high. So the one thing the producers like to hear the least, but the importance that they have on managing cost and monitoring where they're at with margins, it's just we're at that point in the cycle and it has to be dealt with. The opportunities, I don't think, certainly look at calf prices throughout last year. I don't think the price is necessarily prohibitive, but I think it's the age demographics of producers. I think the interest rate environment is a way bigger challenge than when we looked at expansion back in 14 and 15. Age of producers. Yeah. So I think there's a number of factors here that have to be evaluated, but the big one has been Mother Nature just simply hasn't provided that opportunity.
Yeah. When we look, you mentioned China earlier and some of the ups and downs there from a U.S. export perspective. Where is China getting the beef from? Is it coming from Australia or is it coming from Argentina, Brazil? How is the U.S. losing out there?
All of the above.
Okay. Okay. Well, you know what? When you don't know in multiple choice, you just take D, all of the above.
Excuse me. They're doing an ever-increasing volume of business with Brazil. But during 2023, China and Australia has had kind of a on-again, off-again romance and has Australia went through a severe drought through certainly the first half or late 22 and the first half of 23, that they were aggressively harvesting animals. That drove down prices, and that was the incentive for China to come back in and for them to play nice. So more and more Australian product is going to China and Southeast Asia. More of the New Zealand product is going to China as well.
And transport, you look at the distance between Australia and China and North America and China, there's definitely a freight disadvantage here.
Huge freight advantage. There's also a way not to say excessive, but a way larger share of direct Chinese investment in properties and in processing that have those linked relationships with Australia and China.
And that's the kind of relationship that makes us a little bit nervous here on this side of the globe, right? Pushing back on some of that investment, or are we too reactive to that?
I believe we are too reactive to that, and here's why I say that: the U.S., the quality product that the U.S. produces, and we've seen a sizable increase in the percentage of Australian slaughter that would be categorized as fed beef. But even with that said, the U.S. is in such a unique position to be the high-quality beef provider to the world. And we're not going to lose that, we're not going to lose that status anytime soon. So if we have to make any adjustments at all, it might push us further down the road to being the specialty market or the niche supplier, but have marketing that have an industry that's designed for specific end users and with end use specifications. And I think we'll see more of that and less of a commodity mindset.
Don, before I let you go, I'm curious. There has been talk. Again, yesterday I saw some reports about for former President Trump. One of his campaign platforms is a 10% tariff on all goods coming into the U.S. He does not seem to be somebody that's a fan of carve-outs, so to speak. What kind of impact would that have on North American cattle and meat and beef trade?
It's not going to help.
I feel like you're kind of understating that, Don. I don't know. We only see each other once a year, but that to me feels like a little bit of an understatement. But you clarify.
Okay. Where my follow-up statement to that is that opens the door to retaliatory tariffs from our customers. And certainly the market of choice in most of those cases would be on U.S. ag products. So if we start, there's so much water going to roll under the bridge between now and election time that, who knows. But I do think, this is the reality. I think that the complications with global trade will likely get more intense before it gets better.
Yeah, it's going to be a long election season, like 185 days, Don. That is a long time. Okay. Well, Don, it was great to see you again. Enjoy the rest of the CattleCon, and talk to you again soon, man.
Always good to talk with you. See ya.
Great stuff. That is Don Close. He is with Terrain. I do want to mention MMP. You deal with many uncertainties on your farm. Managing risk should not be one of them. MMP's ag team specializes in risk management. Visit mmp.ca to learn how you can stay ahead of the game and plan for the unknown. We'll be right back on Real Ag Radio from Orlando, Florida, right after this.